The management of Titan is ready. Let's connect with Mr. C.K. Venkataraman, Managing Director of Titan Limited. Good morning, sir. How are you feeling after your quarterly performance? Everybody is saying that Titan business is slowing down. Is it true?
I'm feeling very, very good. I'm super excited about a year that has actually gone exceedingly well. And we always take a slightly longer term view of businesses as opposed to quarter on quarter. And if I were to give you a, marathon analogy, and I'm into it, and I believe companies are also into that. We had announced in May 2022 a 5-year plan for most of the businesses of the company, 2.5x for jewelry, 10,000 crores by FY26 for watches and wearables, many thousands of crores for international, 1,000 plus crores for Tanera and all that. And when I look back, FY23 actual achievement, we are very much on course for that. Now, when you're running, if I take 20 quarters in 5 years and 2 kilometers equivalent to a quarter, in some 2-kilometer stretches, you do better than plan, and therefore you get a reserve of that, and you use that reserve to maybe, slow down a little deliberately, including, the analogy I would use is actually investing the money that you have earned in things that you need for sustaining that run. And therefore you slow down, increasing your energy. But as long as at the end of that 4 segments, which is 1 year in this case, we are on course for that FY27 plan, that means we are on plan. So I'm very, very satisfied. All of us are super excited to be where we are in May of 23.
While you're catching your breath and, conserving energy for the next leap forward, just in the very near term, because, that's what the markets monitor and our viewers, has there been a moderation in demand in the month of March because of the volatility in gold prices? And did that continue in the month of April as well?
Like we shared in the call yesterday, it went a little into the first half of April as well. What the gold price related volatility, gold price volatility and the slowdown in demand as a result of that. But I'm just sort of restating that these timeframes are way too short while the markets look at it. But we also keep telling the market to look at, because obviously the valuation of a company like Titan or any company is done with a certain, zoomed out view of its prospects in the near term and not quarter by quarter. So that's why I'm saying that the year has been exceptional. FY23 has been exceptional in terms of sales growth, profit margin expansion, market share gain, customer experience standards, every which way. And therefore, we are totally on course for our FY24 ambition as well as FY27 ambition.
24 is a year of rest, a year of consolidation. What gives you the confidence that you are still on course for your FY27 ambition? Because you have a little bit of volatility and a little bit of slowdown to deal with them.
See, the first marker is the first year out of the 5 years in this 5-year journey. How well have we done? Have we done as per the milestones that we had put in for March 31st, FY23? We have done. And the 4 quarters, were different while we reached the end, but we reached the end and the dispersions across the 4 quarters were not so dramatic for us to, it was not like a volatile 4 quarters. The 4 quarters were sort of around the average of the mean. So there is no doubt at all in our minds that we are on course. That's point number 1. Point number 2, the enabling conditions on the basis of which we developed a 5-year strategy, 5-year ambition, those enabling conditions are very much there, notwithstanding the slowdown in the first fortnight of April. It's one of 26 fortnights in a year. And we can't be getting worked up about one fortnight, which is slow, because we have in our hands a huge market share opportunity in virtually every business where we operate to, go after share gain and actually make up for whatever lost ground in the first fortnight of April. So the customer segments are with us, and the explosion in the top 2 customer segments that is expected in the $5,000 per capita, that's going to be relentless, even if a little bit on and off, from a month-on-month point of view. The market share gain opportunity is very much there. The formalization acceleration will continue. The assets on the ground in terms of stores, people, the Bharat opportunity. Every time I go, I just came back from a deep trip in Bihar, and every small city in Bihar I go to, it just jumps out the opportunity for Titan Company in every one of those cities. So, therefore, the enabling conditions continue to exist. If they change, obviously the trajectory can change, but they are not here to change for a while.
Okay.
That's the basis for.
Now so there was a huge tailwind for Titan, and it could be centered around three pieces. That's our understanding. Number one, the Titan brand with better designs, market share gain, and the promise of a better experience and a promise of 24 karat gold. The buyer was told what he is buying. That led to significant change in the entire jewelry market. But your peers are also now following a similar template which you started. So my question is that while it was very easy to gain market share when this initial change was adopted, do you think increasingly it will be tough to keep on gaining market share, especially from the unorganized to organized, when the peer set is also getting more conscious about the strategy Titan has followed?
Obviously, the overall competitive intensity has increased in the last 3 to 5 years. But what is also simultaneously happening is that the total share of the organized sector within the jewelry industry is also dramatically increasing. In every city, in every town, people are wanting to buy brands. Now, some of them will end up buying brands which are our competitors, some of them will end up buying Tanishq. So therefore, the overall opportunity for the branded segment is exploding. And we cannot at all underestimate the power of the Tanishq brand. We are only talking about purity when we are talking about 24 karat and all that. But there is a brand, there is a desire to own and wear, to be seen owning and wearing a Tanishq brand, which is very different from somebody else having a design which looks like this and somebody else having an equally pure product. And the customer experience that we have created systematically over the last 2 decades of really delighting customers, creating fans, building deep relationships with millions of customers across the country, that's not an easy thing to replicate at all for anybody, whatever be their deep pockets, whatever be the scale of their ambition.
Absolutely, and I wouldn't beg to differ at all. It's just such a pleasure and such an experience to actually go to one of the Tanishq stores. But Mr. Venkataraman, tell me, what about the watches and what about the eyewear businesses? What's the vision ahead for those?
See, the watches and wearables business had, shared a very ambitious a dream of 10,000 crores of MRP by FY26, and we are on course for that. In fact, we crossed the 5,000 crore mark in FY23. The wearables business has taken off. We have done many things right in the last 24 months and in the last 12 months, including reorganizing, getting in talent and all that. The results are very much there to show and stay. We are now a prominent name in the smart wearables category, and I'm sure, and the sales growth has been explosive in FY22 as well as FY23. In the watches business, the Titan brand particularly has been really scorching the pace in the department stores, for example, where all the international brands sit. Titan brand is the number one brand in the department stores, continuing to grow at a fabulous pace, even in the other channels like Helios and the World of Titan. We believe that the fashion analog watch represented by the brand Titan is a very powerful accessory. It's a very powerful symbol of emotional relationship. It's a very powerful symbol of status. And we're pushing all these buttons, and the results are very much there in FY22, in COVID, in FY23, post-COVID, to show and to see. And we are really pushing the premium journey of the Titan brand, going into beyond 50,000, 100,000, all the way up to 200,000 rupee price points through product innovation, marketing, retail, so transformation and all that, and super excited about the watch business as well. As far as the eye care business is concerned, the last 2-3 years were actually spent substantially in transforming the operations of the business, and you'll see quarter on quarter results barring quarter 4 of FY23, where we deliberately decided to invest in certain parts, in employees, in company stores as a leap forward in FY24, and in partners. Barring that, every quarter we have delivered exceptional results, and now in FY24 and 25 we are focusing big time on growth. And the market share here as well is very, very low. It's at best in the high single digits, and we are unique in the part of the business where we play. So watches and wearables and eye care, not only are the dreams are big, but the positioning is very, very strong.
And on that sparkling note, we shall wrap up that conversation. Good to hear you so confident, and thank you so much for joining in with that perspective on Titan.
Thank you.